All right, so I welcome you all once again to this special edition. It's just to solve questions, and we are good to go. We are looking for one console. There are 4 questions you should look out for district exams. The consolidation for district exams, they are questions on disposal of subsidiary. At least try disposal on disposal when its financial position is due for exams. Disposal of P&L. Good. That's first set of questions you should look out for. Then question 2 is what we are doing now. Complex group structure. Complex group. Complex group with step acquisition. Step acquisition. It's a balance sheet. Financial position. Those things are purely balance sheet consolidations. And I'll show you why we are interested like that. Purely balance sheet issues. So when we are dropping questions from that angle, be like that. So take notice for these things, questions, and be okay. Now we are looking out for your third question. Should be on cash flow consolidation. Cash flow. I'll never give up. I won't give up. Then the fourth one should be on foreign sub. If you're able to solve one question under each, you have a lot of time to write your paper. 2 weeks. 1 day, solve one disposal question. And I have questions for all this. Today, I am clearing complex group structure from inside for you. So I've cleared one out of the journey. So let's go to Accra group. And we are good to go. The question is in here. First, I walk you through what you should do right after reading the requirements. Prepare the group consolidated statement of financial position of Accra Limited. Accra Limited. So once I hear this news, first thing that I will do in exams is this. I'll write here, it's question 1. Accra Group.
Alita.
Shh.
Accra Group. Consolidated statement of financial position as at, let's go and check the dates. As at 31st of March 2018. Please, where would the year start from? As at 31st March. When would the year start from?
1st April.
1st April. And the next day of the previous year. So 31st March 2018, the next day will be 1st April, previous year, 2017. So these are where we are reporting. Check the reporting currency. That's the next thing you have to check. So you see in exams, you don't have time to read the entire story before writing something. The reporting currency is in millions, Ghana cedis in millions. You see, the examiner have points. Some of the figures have points. 0, forget about them. You focus, just write Ghana cedi here in millions and do the point. As the examiner wrote it, the same thing. Good. You are done. I am solving this question under exam condition. If you go balance sheet is there, I'll try as much as possible that the 4 questions I'll solve, at least 2 questions on balance sheet, 2 questions on P&L, and you are good to go. If I'm able to solve these 4 questions with you, when you sleep well, when you walk with happiness,
Amen.
All right, so I'm done. And exam condition. And exam condition, the entire space, leave it, don't write anything there, the entire sheet. Go to the next page and write there question 1. Write there workings. First thing you have to do is your workings 1. You see, without reading the question, what you have to do. This is what I expect everyone to do. Workings 1A. Third examiner, group structure. So write the parent name here. I know the parent is Accra. So go and read and get this thing done. And let me show you where you can get it. Check from the top of the question or first footnote, note 1, or note 2, or note 3. That's all. You see, time is essential commodity that no one can manage it. No one can reduce it. No one can stop it. You can't control it. So please, you prepare. Now let me go. So when I check the top part of the question, I only see Accra Limited, a public limited liability company in Ghana, operates in manufacturing sector. Accra Limited has investment in 2 other subsidiaries, other Ghanaian companies. The draft statement of financial position as of 31st March 2018 as follows. Next, note 1. I'm going to take my time to read note 1 clearly. It said on 1st April 2016, Accra Limited acquired 14% of equity shares of TAD, Accra Limited, for a cash consideration of 130 million. On the same date, Bokun Limited acquired 70% of the equity shares or equity interest of TAD for a cash consideration of 635. This is a complex group structure. This is the first window of ICA exams for part 3, final level. This is what you need to know. So Bokun. So here it means parents have acquired 14 and another subsidiary have also acquired 70 in TAD. So when I reach more, that means Bokun himself is likely to be a subsidiary. As and when you read, summarize and write something small, write TAD here. Leave enough space. Leave a space here because you may go down and go and read another story. Maybe they have associates. You bring associates. I'm expecting associates in this sittings exams. If you don't have it, financial reporting people will have it. Associates. Associates. IAS 28. Investment in associates. I'm done. And the exam condition, this is what you have to do. Continue reading. The rest of the story, you don't need it. I'm only interested in group structure. Only interested in group structure. Note 2, on 1st April 2017, Accra Limited acquired 60% of the equity interest of Bokun. That is all, 60% of equity interest of Bokun. Oh, I didn't write the figures. So here, write direct holding. Right here, direct interest. Accra Limited holds 60% direct, and it holds 14% in TAD. Good. That's what you have to do. Then you come and tell us indirect. Indirect holding. Bokun has 70 in TAD. So that 70, Accra can take. Accra can take only 60% out of the 70. What do you get? 60% of 70. I need someone that will do the calculation for me. Somebody should.
42.
Come again.
42.
42. So write it here as 42%. Put everything together. Because something group holding. Group holding. You can decide to call it group interest. Put all of them together. You get 60. You get 56. That's all. Now NCI. NCI here is 40%. NCI here will be what?
44.
You are done. You see, you have not read the entire story. This is what I expect from you. Once you read the requirement, don't go there that you are going to balance it. No. Don't have that mindset. Have the mindset I'm going there to score my tick and come back home safe. So this is what you have to do. Go ahead, don't end here. Before you end this, you have to scan to the other footnote too and see that there's no percentage inside. Scan to the rest of the footnote and ensure yourself that there's no what? Percentage inside. No percentage. Ah, I'm done. This question is Scarlett and Finland. It's ACCA past question. Scarlett and Finland. December 2014. December 2014 past question. Dropped. All your console questions are ACCA past questions. So this trip, the 4 questions we are going to release are super. Yes. Now, right from here, go to the next workings 1B. Effective date of acquisition. Effective date of acquisition. Effective date of acquisition.
Hello, target.
Yes, boss.
Sorry, I just joined. Please, which question are we solving?
November 2018.
Okay, thank you.
Effective date, write a substitute here, Boko. Right here, 30. That's all. One tick for you, free of charge. So let's go to the question and deduce the effective date of acquisition. All right, it's keke. Don't focus on the difficult things, no, I beg you. On 1st of April 2016, Accra Limited acquired 14. On the same day, Bokun also acquired 70. So the group gained control on that fateful day on 30. So 30, 1st of April 2016. So right here, 30, 1st of April 2016. That's all. Don't go and focus on the difficult one. Now let's go to note 2. Bokun was there. On 1st of April 2017, Accra Limited acquired 60. So on 1st April 2017, that's all. 1st of April 2017. I'm done. The last workings, then you start. This is the most important thing. You should not forget about it. Right here, period of consolidation. Period of consolidation. So, right, Boko? Right, study. Now, check the date and check the reporting day here. Don't go back to the question, please. Don't go back to the question. You know anyone writing corporate reporting? Do the person a favor by sharing the link to them. Go back to your requirement. The date is here, 31st March. So trace each of the acquisition dates. Oh, Trace each of the acquisition dates from 1st April 2017
Like this.
31st March 2018. How many years? How many months? When I trace 18. So Boko is 1 year, right? Full year consolidation. Tadi. Okay, that you right. Full year or 2 years consolidation.
Target.
Yes, please.
Please check the date of Accra.
Let's go there. Tadi 2016. 1st April.
He had no control over Boko. As at the time Boko acquired Takrady, Accra had no control over Boko. So if we use that acquisition,
no, it occurred on the same day too. On 1st April 2016, Accra acquired 14% of equity of Tadi for a cash consideration. And that means on the same date again, Boko acquired 70% of.
yes, Accra control. At the same time, in Boko. So we classified Boko.
Please, we can hardly hear you.
Hello, sir. What I'm saying, can you hear me?
Yes, I can hear you now.
Yes, so I'm saying that as of 2016, Accra had no interest in Boko. Accra had an interest in Boko in 2017. So if we use 2016 to report for Takrady, you might be wrong because Accra is a parent now.
Good. So here, let's do the mathematics. You see, as at that time, we have not acquired Boko. Yes, I think that's right. On 1st of April 2016, we only have 14. But Boko controls 30. But by then, check the date we acquired Boko. Let's go to the next question. We acquired Boko 2017.
Yes. So the reporting date should be the same for both Boko and Takrady.
So we have to amend it and make it full year to be on 7. So take notice of that. Even though Boko controlled Tadi long ago, so we cannot, because as at 2016, we don't control Boko. So that is a very good observation. Take notice of that. We are true. So take notice. Now let's continue the game. Once you've established this, go ahead and do your consolidation. That's all. All right, so that is that. Now let's go straight. Now that we've established that we control both subsidiaries,
Rachel ya time tare and they needed their oil.
Our microphones will be back. We have to now go straight and do your consolidation. So everybody go to the top. Start adding them. Parent plus all the subsidies. That's all. So these are the first thing you have to do. The first thing you have to do is this. So I'm going to do that for you. When they move, I move. When they stop, I stop. This is what we want first. So right here, assets. Me like this, I normally don't even write asset too. I like writing on current assets. Because time in exam is not there. So non-current asset is what me I'll write. So non-current assets. Underline it. Period plus other subsidiary. Accra, PPE. So write the PPE, 720.550 plus 650. Straight up. So right here, PPE, no shortcut in exams. 720 plus 550 plus 650. Forget about the 0.00. When it's a decimal, you make it point. Then you move on. Time in exams is essential commodity. Investment. Once the examiner said investment in subsidiary, don't waste your time and consolidate. We don't consolidate investment in subsidiary. So these two investments in subsidiary should never be consolidated. Now consolidate the financial asset. 160, 10.5, and 70.5. Financial assets. You open your brackets. What are the figures? Let me go there. 160, 10, and 70. 10.5 plus 70.5. Leave it. Then when you're about to finish, please, I beg you. Write here goodwill. And leave at least 2 lines before you do your total. Because for part 3, consolidation, I expect the examiner every sitting in your footnote. He has to leave something in the footnote that will create additional assets so that your non-current asset will be wrong. Unfortunately or fortunately, it always affects parents. Always it affects parents. I'm just looking for one day that the examiner will make it affect a subsidiary. It will create a terrible issue. So leave a space slowly. When they move, you move. Check and see whether they added. They added, you must also add. They say current asset. You must also write current asset. Current asset 447.5. So current asset, let me do the current asset on the next line. Current assets 440 or Please, you have the figure.
447.5.
447.5. 447.5 plus
340.5.
come again.
340.5.
340.5 plus
Plus 75.
no point.
No coins.
You are done.
Yes, sir.
All right, so when you are done like this, you go ahead. When you move, you move. When you stop, you stop. The row total assets. You go to the next line. You must also write total assets. Let me see. Total assets. I'll write that one here. Maybe total assets. Next line, the root equity must also write equity. You are fully aware that equity we pick only for
Parents.
parents. If it be level 2, we normally adjust the equity. We share exchange. But here, we will not worry you. You are far above that. So here I can boldly, please, they wrote equity and liabilities. You must also see equity and liabilities. So they said equity and liabilities. Let me add it to it. What I see is what I must write. Now share capital. Pick only parent. It is haram, forbidden, for you to consolidate the share capital of a subsidiary. So right here, share capital, please what's the figure?
875.
Here, feel free and place it here. With the exception of situation where the consideration parent paid, it includes share exchange and it has not been recorded. Look at it. Look at the condition. Condition that the share exchange. And at the same time, it has not been recorded. If you don't see this in the question, feel free. It's a free figure. Nobody will penalize you. It's a level 2 financial reporting. So if you're writing financial reporting, that is the situation. That is where we can take our time to do our stuff. Retained earnings. 620. Here, write group. Retained earnings. Here, you can't write the figure, no. Group retained earnings. You leave it, you go and do workings. Next, they say other component of equity, OCE. OCE. So group version of it. Group. OCE. Leave it. Continue the journey. They underline, they had total equity, must also underline. Underline the figure. You get an answer. Then come and write non-controlling interest. Whoever did not underline and you add an NCI direct to it, it's against the law. We beg you. We God beg you. Whoever who said that target Nansa I didn't know yaka boom and medical prekwan that be Israel. If you add NCI to equity, you are trying to tell us that NCI is part of equity. Please, NCI is a liability. NCI is a liability, not equity. However, it's equity liability. It is the portion of the total asset that belongs to other group. An amount of the net asset that belongs to other group, other minority interest. You see, in the olden days, we call them minority or inferior. They told us that we are insulting them at AGM meeting. So now we call them non-controlling interest. So please do not add it to equity. Get your equity figure first before bringing NCI. The reason being that NCI is a liability, not part of equity. We beg you. Non-current liabilities. Continue the journey. Non-current liabilities. You underline them. You bring the total answer here. Then you now go to non-current liabilities. Wait, within 15 to 30 minutes, you should be able to at least clear this. Non-current liability, what's the figures? 492.5. 492.5.
382.5.
382.5.
75.
And 75. That's all. Current liabilities, 57.5. Current liabilities.
57.5. 43.5.
98.
57.5 plus
Plus 43.5.
plus.
Plus 98.
Good. You leave it. When they finished, they added everything. They had a total liability. If you are afraid small, you leave one line and write total liabilities. Hey, as we should you as Semaba. The next line, they wrote total equity and liabilities. Must also write total equity and liabilities. And exam condition, it might not balance, so don't worry yourself too much. We are not there to balance. We are there to get majority of the text and get out of the examination hall in peace. Next. Now that you are done, you are now going to take your time and continue. Once it's about balance sheet, know your standard workings. It's about P&L, know your standard workings. And one other person won't hear say. That's why the question you asked at the beginning of the class that target this trip, if you look through the sky, will it be like P&L or balance sheet? Yes. Let me show you something small. What happened in last trip? This is last trip. Exams. Just check for your eyes. Tanda, Adama, and Banda. Balance sheet. You see, this was a very fantastic question. Anytime the examiner gives you the breakdown of current asset, that means the examiner doesn't mean business. He's very good. Unlike a certain boss of mine, He will congest it. He will never give you breakdown of current assets. So you see, you had other component of equity. Current liability and non-current what? Liabilities. The same style. The same style. Think this is the question we are solving. Have hands inside the last sentence question. It have hands inside. It have hands inside. It has hands inside. So I'm done. Now, once you are done, go straight to do your net assets of the subsidiaries. Go ahead and complete your net asset of the subsidiaries. So workings number 2, net assets of the subsidiary.
But it's a quick question, can we do the cost of control before the net assets, or
Most often with the part 3 in step acquisition or in recent time, we normally give you the cost of control straightforward. So there's no calculation that you have to do. So you can only pick it up. Then you probably have to adjust it with indirect holding adjustments, basically. If not, you can do that in the goodwill calculation. Agree.
okay?
You can decide to add it to the goodwill computation to be on server side. Net asset of mention the first subsidiary. Accra Limited has hands inside your last sentence question. It has hands inside on Ubi. Then it means that from there plus or minus 1, no hala. Net asset of first subsidiary Boko. I am walking you through how you have to do the thing. No. As at now, I have not read all the footnotes. I'm still happy. I am solving what I have for them. What they have, no. So you see, then I write here at acquisition. At reporting. Post acquisition. You don't need to read all the footnotes before you start the work. Console. That's one good news about Console. I'm done. So here, I'll walk you through how you have to solve the question. You see, fair show. All your console questions, this is how you have to solve them. Now go to Boko Limited. Copy his share, his equity items. All the equity items, copy them under reporting. First thing. So kindly assist me. Share capital of Boko.
605.
Hey, there's no O in.
Hey, sorry. 605.
Good. What next? Retained earning.
At report, we have 465.
465. Then other component of equity.
As reported, we have 40.
So you see, this is what I expect from you. First thing, if you like, you can create another column like this. You count up to a particular pages, but I don't want you to become confused. Let's finish Bokun. When I'm done with Bokun, we'll go to Tadi. This is how you have to answer your exam questions. To be on the safer side. Or else it will give problem. Now, first assumption. You assume that share capital will remain the same. So repeat this figure here, the same thing. Put that here. So we are going to the footnote. We are going to read the retained earnings at acquisition and the OCE, and we are good to go. So now we are going to read slowly.
Target.
Yes, boss.
Please, is it advisable to have a similar skeleton for Takwadi so that when we read the notes, then we'll be inserting both of them?
Good. That is, if it will not confuse you,
Okay.
we can do the two alongside the ghetto.
Okay.
But there are some people, they'll say, Target, why are you talking about Boko and Tadi at the same time? So you can make this one note 2A, net asset of Boko. Note 2B, net asset of who?
Parody.
Of Tadi. Hey, I never wrote Tadi. Yeah. Exams.
Yes. Hey, I don't know. I did my big questions.
At acquisition.
Hello, Target.
Yes, please.
Sorry to bring you back small. Can you please bring the net assets of Boko so that I can do a screenshot? Sorry. Thank you. Please, you can continue.
Good. You repeat the same thing throughout again. Repeat the same thing throughout. Share capital. Don't forget the reporting currency.
Not again.
Please, if you don't want trouble,
I don't know what you said.
you go and take insurance at the top there.
What
Can
again?
you help me? What is the share capital of?
You forget.
100.
Tardy.
These are not new things. These are things we
Can you give me share capital?
It's 400.
400. Retained earnings.
At reporting, 175.
OC.
47.
7.5.
Repeat the 400 here and throw your dash. So as and when we are going to read a story, but please take notice. We want the net asset at the date of acquisition of Tadi, which should be 2017, not 2016. So can you take notice of that? Note 1. So you see, On 1st April 2016, Accra acquired 14% of interest of Daddy for cash consideration 130. At Mboko 70% equity interest of Daddy for cash consideration of 635. At 1st April 2016, identifiable net asset of Daddy had a fair value of 495. We won't take that. Retained earnings 95. Retained earnings 95 million. Other components of equity is 26. We won't take that. Good. At 1st April 2017, the identifiable net asset of Daddy Limited had a fair value of 570. Good. We'll take that. Retained earnings is what? 120. OCE 35. Let me go and fill in the portion first. You see? Exams. People will read all this story. Taking 2 minutes. When they are finished, they need extra time to go and pick the figures again. No. Once you read the figure and you need it, you pick it. Retain earning for Boko or for this one study 120 and 35. Target, go and put it in the account. 120 and 35. That is correct. Now get me the post-acquisition changes. 75 minus 120. Answer.
55.
47.5 minus 35. Answer.
12.5.
Good. Then you continue the reading. The examiner said the excess, because they gave us the identifiable net asset had a fair value of what?
575.
575. And they said the excess in fair value is due to non-depreciable land. So what you have to do is that leave a space. Leave a space. And write here 47575. And write here land into bracket fair value adjustment. Call it fair value adjustment. Fair value adjustment into bracket land. Please add all. If you are not getting 575, what should be the difference?
20.
The difference is 20. If nothing was said about it, repeat the 20 throughout. Nothing was said in this question. Repeat it here. If something is said that, oh, the fair value adjustment has been taken care of, it has been captured in the financial position, please, I have reduced the question that will drop in the exam to 3. Only 3 questions you have to solve. And 2 found. With the Opa obetu me the picanta back. And Pekia morning. Yes. Please add the net asset that's reporting for me. But before you close the chapter, we are not done. I should not close the chapter now. Let me explain to you why I can't close the chapter now. Go through the note again. Anywhere you see Bokun, they've mentioned Bokun's name. It means there will be an issue. They say that, in addition, the fair value of the 14% holding Accra Limited, which was classified as fair value 2 P&L, through P&L was 140 at the first March. So that's what you use for your goodwill calculation. And 155 million at the first March 2018. So there's additional fair value adjustment. There's additional fair value adjustment or at the reporting date. So we'll look at it. Now, before I continue, let me go this. Any figure, this one use red pen to write it. Any figure that you yourself, you carry from the footnote, and you add it to the at reporting, automatic, it will appear on the balance sheet and say balance it. That's a double entry. Let me repeat it. Any figure you carry by yourself from the footnote, in the P&L or the at reporting, please take notice of that. So with this, it will go straight to the console balance sheet. So the 20 go to PP and add it to PPE. PP, so let's all go and add. Everybody go and add. Plus 20. You understand?
Yes, revaluation gain.
Good. Before you continue the story. Now, we'll talk about this fair value of the investments. Go to the next footnote. Now, on 1st April 2017, Accra Limited acquired 60% equity interest in Boko Limited, a public limited liability in Ghana. The cost of investments comprised of cash consideration of 625 million. On 1st April 2017, the fair value of identifiable net asset acquired was 975. 975 million. And retained earnings is this. So let's go. Help me. Retained earnings 325. OC 27.5. Let's go. Straight. This Bokun good. Please retain earnings is what?
325.
OC is what?
27.5.
So now let's find the difference. 465 minus 325. Answer.
140.
240. Good. Please.
140.
340.
140.
Okay, 140. Please, they just dropped 2 questions for you. Now they've reduced the question from 4 to 3, now to 2. Hey, what a good news. This is it. Empire Beja.
OCI 12.5 difference.
That's all. They gave us
975.
975.
And the fair value.
They said the fair value is non-depreciable land. No, I don't like this kind of questions. No. Why can't you give land so that depreciation should be taken into consideration? So what's the answer? The total
975.
So what will be fair value adjustment?
17.5.
70.
17.5.
Oh, okay. Repeat them. Nothing was said again. Repeat them. Dash. Go to your
Senior, please a question. Just is it the same fair value, the total 975 that we use for the goodwill computation?
yes. Now this total
Okay.
become good. Yes.
Okay. It really confuses me sometimes.
Yes. The examiner like this question, but personally, I don't support them. Dive. They want to take the light again. All right, so computation for me. What is the other one?
1127.5.
Come again.
1127.5.
1127.5. 1127.5. You see, ideally, before you close it, let me give you a secret. Before I give you the secret, go to your PP and go and add any figure that you add to your net asset at reported must appear to 17.5. Go. Feel free. Now, before you close any net asset, I beg you. Obviously, I didn't close it. Don't close it like that, though. Before you close it, go through the footnote, all of them, and make sure that they've not mentioned the subsidiary's name in any of the footnotes. So let's run a test. Let's run a test. This is the first question we are doing. There are two direct questions they've dropped. I'll solve those questions with you. Handle them with care. And then that is all. My next question, I'll solve one. My next, I'll solve the other one. Then all the questions I'll solve after the two, they are camouflage. But I'll still do it. Read all the footnotes and be sure that they've not mentioned Bokun and Tadi in the notes. So let's go to note 3. They mention goodwill. For goodwill there, we want. So they say goodwill of Bokun Limited and Takrade Limited. No, I'm not done reading the note 2. Note 2 main view. They say that it is the group's policy to measure non-controlling interest at acquisition at acquisition at its proportionate share of the fair value of the subsidiary's net assets. Wait, that story where confusion among for papa. Please, which type of goodwill method are we using? Is it a full goodwill or proportionate or fair value method?
Proportionate method.
Proportionate.
Is it fair value method or proportionate?
Proportionate.
Proportionate. Don't let this fair value here confuse you. It's a planting that we all do. The fair value here is just justifying the net asset. It is never justifying goodwill. Good. So proportionate. I like that. Note 3. Goodwill of Bokun Limited and Tadi were tested for impairment at the 1st March 2018 and found there was no impairment for Tadi. However, goodwill of Bokun was fully impaired by the reporting date. Hey, okay, we'll do it. Don't close the net asset workings, I beg you. Read all the footnotes and make sure that they've not mentioned the subsidiary's name. So just come through here. They say, here they mention Accra, parent, so do not affect. Note 5, they mention Accra, parent. Note 6, they mention Accra, no wahala. Oh, we are done. So indirectly, you are done with your net assets. When happening that way, you are very happy. Oh, if your net asset is correct, a lot of things will be correct. If your net asset is wrong, a lot of things will be wrong, including goodwill. Please add them for me. Add the latter part.
I want to have understanding. Now, if the fair value was building, you were speaking about depreciation.
Yes, you do depreciation.
How would the depreciation also come to the net assets computation, or it will only be on the balance sheet?
Okay, so
Like,
let me just answer your question, but with a quick. Let's assume that the examiner said that it's a depreciable building. The examiner will give you the number, the useful life at the date of what? Acquisition. So right here, additional depreciation. Me, I call it additional depreciation. People just write depreciation. I don't have a problem with that. So let's assume that the useful life 5 years. So pick this 17.5 divided by the life left 5 years. Now watch this. Watch this. Multiplied by the period of consolidation, not just 1 year. If your period of consolidation is 2 years, multiply by 2 years. If it's 3 years, multiply by 3. If it's 1 year, multiply by 1 year. If it's 6 months, 6 over 12. The answer that you get, don't come and write it on acquisition, put that here. Let's just assume you have 2. Write the 2 here. Put it in brackets. Write the same 2 here, put it in brackets. Now go straight to your balance sheet and go and deduct 2 from PPE. Minus 2. Do you agree? Before I clean it.
Sure.
Good. What if it was a fair value loss? What if it was a fair value loss? It was never a gain, it was a loss. Negative like this. The same thing.
Add it.
Good. In that case, the depreciation will be excess depreciation. You must reverse excess depreciation. That one become positive, and the depreciation become positive because it's excess depreciation, and we are reversing it. That's all. I'm done. Don't forget, before you close net asset, scan through the notes and see if they've not mentioned the subsidiary's name. Let me see. All right, so that is that. Now, don't forget, your question has been reduced to just 2 questions. Stop them and be free. Please add all this one for me. Let's go in.
Six 4.2.5.
6.
4.2.5.
All right. The next workings you have to do is good rule. Right here, good rule. Goodwill. Right here, Boko. Right here, Tadi. Ghana City in millions. Right here, consolidation. Consideration. Fair value of what? Consideration. You see? Fair value of consideration. The direct consideration. Into bracket direct. Direct. Consideration paid by the parent. What is the direct consideration paid by the parent?
625.
Good. 625. We agree. Wow, I really love this. Here, Boko. All what you have to do for me. And I'll be very happy is to capture this for us to do. Six to 5 p.m. What about the study own? You can decide to finish one before you start the other. You can decide to do the two alongside the ghetto. Select your strengths. Don't follow anyone, I beg you. Look after your interest and then do it for us. So that is one thing I want to let you be aware. Now for Tadi, go and pick the fair value of the 14% holding at the date of when the control is gained. You see, parent paid how much? The cash consideration was 130. But the fair value of 14%, it was 140 at the date of 2017. That's 31st March. Let me take it again slowly. The fair value of the 14% holding Accra Limited in Tadi Limited. In Accra Limited, in Tadi Limited, which was classified as held as fair value through P&L, was 140 at 31st March 2017. Indirectly, would it be the same as 1st April 2017? Indirectly, would it be the same thing?
Sure.
Good. So if that is the case, then we can pick that 140 and then add it to it. So that's 140. So let's go and place it in the account. Um, 140. Again, right here. Indirect consideration. What is the indirect consideration? Indirect consideration, the one paid by Boko. So how much is Boko paid?
$635.
Boko paid.
635.
635. Good. So Boko paid 635. I agree. Then what you have to do is that $635. Then you say less what? Indirect what? Holding adjustment. Just take 40% of the same figure. Why from the 40%? The NCI of Tadi. You see, the NCI of Boko. Let me explain things to you. Accra own 60% of Boko. And now Boko have paid 635. So indirectly, parents contributed 60 out of this money. Then the NCI, which is the 40, they also did some contribution so that they can also team up and acquire. That is all. So someone could have just gone straight forward and take 60% of this figure. That one, there's no adjustment again. I don't like that method because it will let you forget about the second entry. I love this one. So take the NCI of Boku, multiply by the consideration paid by Boku, 635. This is what you get. This is the only difficult thing in the question. The rest.
254.
254.
Four.
You subtract. It will affect this side. It will also go and affect NCI of Boku. Now add everything here. This is now, in fact, this is the workings you have to do. This workings, you could have done it on its own and call it consideration, group consideration. Total group consideration. 625. Here, what do you get? 140 plus 635 minus 254. Answer.
521.
Then, once you are using a proportionate interest method, say less net assets, share of net assets, parent share, less, please, parent share of net assets of the sub. Go back to the asset side. Oh, leave space again. Net asset of Boko at acquisition is what? 97. Find 60% of 97. What do you get? Please, 60% of 975.
585.
585. Let's go. 585. Show working. How you got it? I beg you. The other one, what do you get? Fine. Tadi. What's the group holding in Tadi? Group holding in Tadi. 50.
6%.
So 556% of 575. Answer.
322.
What is a good rule at acquisition?
Accra, 199. No, Takra added 199, Boko 40.
Okay, let me come there. Tap at the 199 Boku 40. Which one did they say, tell us that is a good who has fully been paid? Who was that?
That was Boko.
So Boku is fully impaired. Right here, impairment. 40. Here, dash. 199 again, 0. Right here, good rule at reported. Please. After this question, you must solve only 2 more questions. And you can write your exam successful on Monday. Exactly 3 weeks to tomorrow. All right, so let's go to the, once I'm done with good rule, that means question review. Once you are done with good rule, so workings W3. Three. 199. That's all. Right from here.
Sir, please, I hope you will get the video immediately after the class.
Please, this one is not meant for you. I think you are lost. So. Your class come off exactly 10 p.m. Oh. Ernest.
Sir,
This is not your class. Oh.
advance.
Unless you are preparing yourself for corporate reporting, they are fine. You can still join.
Okay. It can also drop in FR, so I'm also following.
Oh, okay. Oh, wow. 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 I love your vim. Okay. I'm done with goodwill. And once your goodwill is correct, you are done with goodwill. The rest, we call them IFRSs. You don't need to worry again. Worry not. Today will be today. Please don't change the style. Now, right from here, your next workings you have to do, which is so easy. Automatic NCI is free. Hey, after Goodwill, NCI is free. Let me repeat it. After Goodwill, NCI is free. So we are down to Goodwill. NCI is free. Workings number what? 4. NCI. Workings 3. Workings 4. NCI. Non-controlling interest. After this, only 2 questions you have to solve. Target. What are the 2 questions you're talking about? One is P&L and one is balance sheet.
Please, are you solving them today?
No, I'm not solving them today. Today I'm only solving this and then leave you. Then I'll go and come and solve that one. I'll solve one and leave you. Go and come and solve one and leave you. Then after that, I'll solve 2 more questions after my main 2. The last 2 questions I'll solve with you are camouflage, but I have to do it. The first 2 questions I'll solve after this are your examination questions. I beg you. This year, the angels that came are different. I love the angels that came this year. They were specific. Okay, so NCI. This is what I want you to do when I do the NCI. Right here, Boko. Right here, who again? After Boko, who again?
Accra.
Tadi, good. Takradi. My reporting currency. I hope I wrote the money the good rule. I did. Thank God. Here, just pick share of net asset at acquisition. Share of net assets at acquisition. You see, let me tell you the truth. Every console question, we have console workings and other workings. Don't let your focus be on the difficult one. Now go to the question. You can even get it. Check the net assets of the subsidiary of Bokum and find 40% of it. That's all. Find 40% of the net assets at acquisition. What do you get?
390.
Come again.
390.
390. That's all. The same thing applies to Tadi.
253.
253. Two, 5, 3. I agree. Two, 5, 3. 100% correct. Two, 5, 3. Again, when I done like this, we're supposed to just add our post-acquisition profit to it. Post acquisition profit. And then we are good to go. Share of post acquisition profit. But here I'll explain certain things. I want to make certain things clear here, I beg you. Show post acquisition profit. Please. Over here, when you are sharing the post acquisition profit, let's do for Bokun, and let me show you something.
Or no find this most is place for them.
Let's go to Bokun. First, Bokun, please check if there is other component of equity, such as other reserves, such as revaluation reserve, OCE. If they are part of these figures, if it's part of these figures, take it out before you share. If part 2, they do it, we will forgive them. If the part 2s, they do it, we'll forgive them. But if part 3, you do it, we'll never forgive you. We'll never forgive you. We'll mark you down. So please, confirm for me. OCE, do we have a figure? Each figure, is it part of this? Yes. So therefore, I will not share the 52.5. You must share the 140. Agreed.
Please come again.
Senior, please
Sir,
mention the 3 key items.
The total for, sir, please, the total for the post acquisition is 152, not 52.5.
Good. 152.
Yes, 0.5.
We will not share that one.
Okay, sir.
The reason is that if you share that one, it means you have closed OCE. And part 3 will never forgive you if you do that thing for us. We'll mark you down. So always check whether there's revaluation reserve, other reserve, other component of equity. We intentionally do it in your question. So share everything apart from the other reserve. So remove the other reserve alone from the total. What do you get?
40.
40. So share
140.
So multiply 140. I'm coming up. Please, what are you doing? And I'm making verification. Are you doing group retained earnings or we are doing NCI?
Doing NCI.
NCI.
Okay, let me make it so clear. For group retained earnings, do not add the reserve to it. We won't forgive you. But for NCI, add the reserve to it. Yeah. So I'm done. So here you have to add the reserve. It's a group retained earnings you don't add. It's not my no casa because exam na casa on pay. Did you understand or don't understand? Did you understand or don't understand?
I understand.
Meaning that with the NCI, you can go ahead and use the full amount.
Yeah, go ahead and use the full amount. With the group returns, I don't use the full amount. So share for me. So here we can still go and share 152.5 times 40%.
61.
So that becomes 61. You are right. What about 30? NCI will be 44, right?
Yes.
So what will you get?
29.7.
And we think you. Then you bring what you call indirect holding adjustments. Indirect holding adjustment. Subtract it. You see, you subtracted it from a figure viewers. Good. Over here, you subtracted it from Tadi. But come and subtract it from Bokum. 254, right? Is it 254?
It's 254. 254.
Okay, so get me the total and then I'm done.
That with this one, what is the idea behind it?
Okay, so this is the idea. The indirect holding adjustment, right?
Yes. Because the first one we started from Takrade and now we are starting from this side. Boko.
Okay, so this is the infinity behind. Over there, we're calculating goodwill. Goodwill of who? Takrade. And what happened was that for goodwill, it is the acquirer, the purchaser, that will calculate the goodwill. So when the purchaser is calculating the goodwill, just that two people contributed to acquire him at the same time. Parent did, and Bokun also did. But the Bokun's own, parent does not fully control Bokun. Parent controls 60% of Bokun. So whatever Bokun paid, it assumed that parent contributes only 60% because parent holds 60%. So 40% should be removed when you are calculating the goodwill of that company, that study. Take it off. Then when you come here, the other corresponding entry, or else it will not balance. The other corresponding entry is that because Bokon's NCI, we didn't capture that figure. Because that payment in calculating good will not capture it. Do not capture it in Bokon's NCI as well. Straightforward. It means that 254 is inside the net asset of Bokun. The NCI share of the net asset, that 254 is inside. But because we have taken it off when we are calculating the goodwill, because that 254 is inside this money, and we have taken it off, we must also take it off from the NCI share. Don't forget that the 40% we calculate, we calculated 40% on the net asset, we had a 390. Bokon's 40% is inside. So we have to take it off. That's the theoretical rationale behind this 140 stuff. I'm done. This was the NCI at reporting.
197.
197. And and
282.7. 282.7.
That's all. Alternative shortcut. Multiply 44% by the net asset at report. Remember the same answer. For TAD. Multiply the net asset at reporting for TAD. 642.5 multiplied by 44%. She give you the same answer. Confirm for me before we continue.
Confirmed.
Good. The same thing applies to Bokun. Boku 2, kindly find 40% of 975 and subtract 254 from it to get the same answer. I'm done. Go to the face of the balance sheet and record your NCI.
What's 79.7?
But please combine the NCI figure together for me.
What's 79.7?
If you add up 4,
79.7.
workings number 4, right? In exams, when you reach this side, you can start to finish. You can start to give up. Workings number 4. Here you've done a lot too. 4, 79.7. I'm done. All right, so we are going to do group retain earnings, but please, group retain earnings should be your last workings. 2 footnotes, then we are done with this question. Like joke, slowly, we are done with. You see, group retain earnings, there will be a lot of footnotes affecting group retain earnings, so do it last. And there will be a lot of major issues that will affect the parent. Typical example, note 4, note 5, note 6. So I'm going to take my time to deal with these 3 footnotes to affect the parent. So take notice of that, and we are good to go. Group retain earnings and 3 footnotes, note 4, note 5, and note 6. Then you are done with the question.
Group OCI as well.
Good, group OCI. You can do a group OCI. Let's do a group OCI. It's very easy. Let's do it. It's very easy. What kind of very easy. Networking. Workings number 5. Is there any no with the group OCI? If God is not taking and there's another any footnote that will call for OCI, let's do that one last. Well, I can see I'm doing note 6. It is not compulsory that you have to do the note in order of they've arranged it. Order of easy. This is IAS 19, employee benefit. Employee benefit there. And yet which me as usual. The following information relates to group pensions plan of Accra Limited. Fair value of plan asset, 1st April 2017, beginning of the year, at acquisition, 31st March 2018, at reporting. Plan asset is 14. Defined benefit obligation is 15. Closing balance is also here. They said the contribution for the period received by the fund were 1 million. And employee benefits paid in the year amounted to 1.5. The discount rate used by used in any calculation is 5%. The current service cost based on actual calculation is 0.5. The above figures have not been taken into account for the year ended 31st March, except for contribution paid which has been entered in the cash, and a defined benefit obligation. Okay, so they have subtracted it. All right, so that's all. This will tell you. So the working summer, work is very fair. Come on, straight. Let's do that one as working 5. Call it employee benefit, pensions. Pension scheme. Say net obligation. Net obligation. Brought down. Please give me the open balance, I beg.
That's 1.
15 minus what?
14.
Good, that's 1. That year, November 2018, I did intervention at the East Legon. There's a group, there's a pressure group in Ghana here. We call them ICAG also. They do in elections and whatever. I did an intervention at their hall because by then one of their bosses was writing corporate reporting. And we did, I told them specific, you get employee benefit. When they went, it was under console. 15 minus 14. I feel some makai question when pa. I feel some makai. 1. Then you write what? Net interest. What's the interest rate?
5%.
Times 1. What do you get?
0.05.
Examiner with the 0.05 there. It should be considered the teaching. Exams, a best some will. Examiner with examiner with one in your crowd. Examiner one in the Examiner one in the 0.05 there. Then she. Question is set here. Next,
SEC.
SEC, right? Service component cost. What's the figure?
0.5.
Next,
Contribution paid. 1.
Next,
Benefits paid.
into bracket, what's the benefit?
1.5 minus 1.5.
We solve all Kaplan. But then Kaplan have released their book fresh. They released the book in 2017, 2018 November. We had our version. They went accountant's balance.
0.55.
Leave a space. Actual balance.
Correct.
3.
That's
First one,
17.5.
you are seeing where we are picking our figures from. It will be 17.5 minus 14.5, right?
Yes.
Hello, targets.
Yes, please.
Please, why did we pick the benefits paid?
The 1.5.
Yes, please.
Yes.
Okay. Okay.
Now, we are done. Oh. Find the difference. Real measurement what?
Cost
Cost. How much is it?
2.45.
2.45. Do you agree? Or you don't agree? If you don't agree, let me know.
Target, please, the balance brought down. 33. Please, where did we pick that one to? Because I'm not seeing the 3.
Okay, so I spoke to the working, so I'll not do it. Sorry. It's 17.5 minus 14 point what? Do you agree
That's
now?
Okay.
Do you agree now?
Yes, please. But the benefit paid, we did 1.5 minus 1.5.
Yes, always do it that way. 3 mark for you.
Okay.
Now, this one go to group retained earnings. Group retained earnings doesn't go anywhere. No entry. This one goes to OC. That's all.
the 3.
You see?
Target,
Yes, boss.
please.
I'm with you fully.
I said, that wouldn't the 3 go to non-current liabilities?
You see, that's
The
the next
close-
obligation.
Yes.
Yes, add it non-current liability. We agree. Let's go and do it. I think I had my name. Oh. Non-current liabilities plus 3. Friends online. 11 3 workings. We are done with this question. 3. I can note 5, note 4, note 5. Group retained earnings. So up to this stage, wouldn't say want to be yet note 5, any note 4 now. Just go and do the skeleton for the group retained earnings and leave the rest for the examiner. That's that. Okay, so let me now go and attack the easiest note among the two. That's how I do my work. I don't attack the difficult one. No. Good.
Don't worry, it's not that. Why don't you know it?
How many results have I?
Okay, so I'm on note 4. Is the next easy? No. Note 5 is easier than note 4. Me there in class there, whether I like it or not, I'll do it. So let me do it and go. Okay. In exams, you select which one is easy and do it. Let me do note 4. Very is the strongest note among all. On 1st April 2016, Accra Limited acquired office accommodation at the cost of 45 with a 30-year estimated useful life. It means depreciation. 45 divided by so instantly. That is what I expect from you. We'll never give you cost and give you years, and nothing will happen. So never. Once we have given you cost, we have given you yes, definitely something will happen. So you have to do this computation for us. We beg you. Try and understand it for us. It's very important. So who can calculate the depreciation for me? Who will calculate the depreciation for me? Try. 1.5. So if you can't do anything, not that one, no. Who can find the current amount for me? 1 year current amount. $45 minus 1.5. Agreed.
43.5.
So this is what I expect from you from in the exam. So 1 year they will 30. As to where you are sending it to, it's not part of our business. During the year, the property market in the area slammed and the fair value of the accommodation fell. As at 31st March 2017. This is how many years now? From 1st April 2016 to 31st March, how many years?
1 year.
1 year.
Don't continue the story. Where you are? Don't continue the story. Go. You don't know the name. Oh. Find some heading here. Office accommodation. Find a heading. Call it office accommodation. Don't continue reading. This is how you must answer your exam questions. I'm not done reading the note too, but I've seen something I can do. Let me go and do it before I forgot. Name it office accommodation. The heading should come. Right here, cost. Ghana cedis. 45 million. Right here, accumulated depreciation into bracket 45 divided by what?
30.
1.5.
1.5. Carry amount.
40 what?
43.5.
43.5. Third examiner. This is the carrying amount.
Carry amount, yeah.
Any figure they give you to compare. That's all. You are good to go. Now they said that, and this was reflected in the financial statement. Okay, they have reflected it in the financial statement. Okay. The fair value fell 37.5. To compare, there will be that revaluation gain or loss.
Revaluation loss of 6.
Fair value 37.5. Revaluation loss of what?
6.
Now here, they have already recorded it. They say it has been recorded. Where do you think they recorded? Revaluation loss, where it will go? It has been recorded already. Where? P&L as an expense. Revaluation.
P&L as an expense.
Good. Materials on sustainability. Yes. It remind me. Hey. I was adding S1 to it and S2. Next. However, Now, calculate the new depreciation for me. 37.5 divided by how many years?
29.
29 years.
So if I want to see the new I can start by saying new fair value. Let me do it here. New fair value or new value. 37.5. Depreciation. 37.5 divided by 29. What do you get?
1.29 or 1.3.
They say that, however, the market unexpectedly recovered quickly due to the announcement of major government investment in the area's transport infrastructure. On 31st March, the valuer advised Accra Limited offices should now be valued at 52.5 million. 52.5 million.
You're getting a gain over there.
So yeah, if it's after what you get?
6.21.
Come again.
36.2.
36.21.
Now this becomes the carrying amount. What's the fair value at 31st March 2018?
That is 52.5.
What's the revaluation gain?
15.79.
16.79. But because
15.
is it 15?
15.
16.29.
Is it like this?
Yeah.
0.29.
Like this?
1
Yes,
6
sir.
9.
6.
Now, less the previous loss. What's the previous loss?
6.
So 10 point what?
29.
This one goes to group retained earnings. Group retained earnings. Group. It will go there as a gain. Group retained earnings. This one goes to OCE. OCE. Agreed. 11, the last footnote. Then we are done with this question. What a wow. This is so.
Because I need a little bit of understanding with the 6, which is going to the group retaining earnings as a gain.
Yeah. Number 1.
Because from what we read, it has been recorded already.
As loss. So you are going to reverse it. We are going to scatter the loss over there. If your car has been involved in an accident, you lost money, 6,000. And you are still crying about the 6,000 you lost last year. And this year, you have a good news. So you made a gain somewhere, and the person came to give you 6,000. Wouldn't it be a gain to you?
Yeah.
Wouldn't you take the gain and use to settle the loss you made last year?
Sure.
Good. So it will be a gain in the group retained earnings. Why is it a gain? Because this guy is a gain. All right, so the last footnote. Here. Last footnote, then we are done. You see? I want to finish early. Exactly by 8:30, I'm done with this question. Then in the video, we are waiting patiently for your 2 questions. I solved them, and I'm done with you. When I finish, I'll still come and solve another question with you. But the question I'll solve after the next 3 questions, I come offline. But I'll still solve them. I'm down with this note. Now the last footnote. Then left the workings. Once you see restructuring, IAS 37 should come into mind. Two conditions for restructuring. Now let's read it slowly. Accra Limited has announced two major restructuring plans during the year. The first plan is to reduce its capacity.
Hello.
Hello. Let me continue. To reduce its capacity by closure of some of its smaller factories, which have already been identified. This will lead to a redundancy of 500 employees who have individually been selected and communicated. Let me tell you the truth. IAS 37 provisions, contingent asset and contingent liability stated clearly that entities should make a provision for restructuring if two conditions are in place. What are the conditions? 1, formal plan has been drawn. 2, the affected persons have been communicated and identified. Affected persons have been communicated and identified. So once you have a formal plan, and the plan contains the total estimated loss and its effects. Once these two conditions are in place, go ahead and make a provision. Yeah. So the first plan, oh, they have a plan. Formal plan. Yeah. And second condition, 500 employees who have all individually been selected and communicated. So they've made a condition. So provision should be made. Simple. The cost of this plan is 4.5 million in redundancy cost. Provisions need to be made. 2.5 million in training cost. 2.5 million in lease termination cost. The second plan is to reorganize the finance and information technology department over 1 year period. Please, let's solve one after the other, I beg. Let's solve it one after the other. So let's start and add the cost, the provision they should make in the account. And we are good to go. So please, the costs that should be added, it should be the cost redundancy and the lease cost. Please, the ongoing activities, relocation, training, we don't include it. We beg you. So that is all. Now, so please, the cost of the plan, add them for me. What is the cost of the plan?
4.5.
Good. Termination cost is what?
2.5.
Add the two figures together, what do you get?
7.
That's all. Training, please, those costs we don't include them, we beg you. Training costs If you do redundancy, don't put training cost in it. I beg. The training cost will not be added. Please, if you are making a provision for redundancy cost, what are the 2 entries involved? Who can tell me the 2 entries? Then I'm done.
Your liabilities will increase.
Come again. Yeah, so add it to your
Current liabilities.
good. So let's all go to current liabilities and add 7 million. Add. So let's do workings. Let's go and do workings for it, I beg. Or else I'll not be fine. Workings number 7. Provision for restructuring. The condition has been met. And they can only add the 4.5 million and 2.5, making 7 million. Please look for their total cost of provision. The training must be excluded. The training must be excluded. Training and relocation, don't add them. Relocation cost, please. Don't add those things to it. Then you go and then place that. It will go to group retained earnings. Go to current liabilities, add 7 plus 7. Current liabilities plus 7. Last show, then we are done. Last show. He said that the second plan is to reorganize the finance and information technology department over a 1-year period, but it does not commence until 2 years' time. Oh, what do?
Do nothing.
Do nothing. I didn't know start to kind of better over provision, madam. But let's continue. The plan will result 20% finance staff losing their job. They will lose their job in the future. One, you have not communicated to them. They will lose their job in 2 years' time. No. The cost of the plan is 4 million. Redundancy cost is 3. Training cost 3.5. Equipment leasing termination. There's no other entries. No, nothing. We are done. That's all. Group retained earnings, almighty. Finally, we are the latter part of the story. Group retained earnings. Finally, group retained earnings. Group retained earnings. Working is 8. Group retained earnings. Group retained earnings. Do all the workings and do group retained earnings last. 2 questions left. And you are good to go for your exams. All of parents. Right here, Accra. Please, what's Accra's retained earnings? Accra's retained earnings is what?
Accra 620.
Good, 620. Right here, Bokon. Right here, Tadi. Go to your net assets. Bokun pick 140. I think this one I've explained it, not the 152. 140. Times 60. Tadi, you pick I forgot to know. Tadi, you pick 55, correct? Please, what do you get?
84 for Boko. 30.8 for Takra.
30.8. And then 84. Then everywhere we said it will go to group. This one you take your time. Starting from, if you want to get a thing where start from the good rule. That's where we started. Number one, the impairment. All of them go to 40 impairment. If care is not taking, you may miss some stuff out. But start from the good rule. You get everything right. Subtract impairment. You won't miss anything out if you follow this rule. You won't miss anything out. After good rule, come to NCI, nothing will go. Pension, you see. Pension, please add 0.05 plus 5. What do you get? Add the two figures together for me. These two figures, add them. These two figures, add them together. What do you get?
0.55.
The pension costs 0.5 plus 0.05. I do issue balance. We figure where my confirm we are done. We are lessing because the cost. Then don't destroy the rule. Pension your part anyway. Office accommodation. We said that 6. Add 6 to group retained earnings. Add 6 to group retained earnings. Valuation gain. Into bracket reversal. 6. Where again do we say something to go? Fair value. Group retained earnings. Okay, we've done that one already. Provision for redundancy 7. Provision for redundancy. You see, if I arrange this way, you won't miss anything out. Provision for restructuring. It was 7. Subtract. Confirm that we've not left anything out before you close it because the cancel one is cancelled. We are almost done. The next 2 minutes will be out of here. Any other?
Sir,
Yes, please.
please, the Takrady figure, the 55 times 44%.
Yes, please.
I had 24.2.
Yeah, it's 24.2.
It
I
should
wonder
be,
why.
it should be 56%.
Unless we are using the 56.
Yeah,
Yes.
it's 56% though.
Okay.
I'll start. Yes.
All right.
Yes, please. All right, so that is that. Now, Trouble wahala don't dey. Okay, so confirm that we have put all the dictation inside. All right, so that is that. But I have a few concerns. Though. Some of the figures, the calculation you gave me, when I add it in my calculator, I'm not getting it though. So I'll maintain your figure for you, please. But when I add mine here, I'm not getting what you are also getting there.
It's the procedure that is a very important thing.
Yes, because when I add my figure, for example, there's a particular figure. This reversal, that reversal way, mihuni kra, mihuni that reversal way mihuni. Because me sure workings na me na reversal no. Me sure mihuni, but the emphasis. All right, so on that note, I think we are through. I hope we've not left anything out though before we close the chapter of this. Because you just be over there. And you judge you. I think we are done, so can we add all of them to it? 11-1.
Yeah.
No, 11-1. Don't close it too. Now let's go to a particular note. I told you that we'll be doing it. It's in the footnote. The 14% Accra Limited acquired. As at from, you see the 14%. At the date of acquisition, the fair value was 140, no matter. But at the reporting date, it was what? It was what?
155.
Gain or loss?
Gain.
And they said
15.
the fair value to do P&L. So can we add it to it? I nearly forgot about it. So the next one, say gain on investment. $155 minus 140. Add all the figures together for me. Then let me do the OCI and we are done. OCI. And then we are done.
$681.25.
Kindly come again slowly.
681.25.
Let's go and put it in the account. OCI, group tenants. I got two figures per the question way. Then you balance it for me. 6. Come again, 6.
681.25.
Let's go and do OCE. Workings number 8. This is 9. OCE. 1. Bring all parents. Right here, Accra. Please, what's Accra's OCE?
52.5.
Come again.
60. 22.5.
Then right here, Bokun. Right here, Tadi. The Bokun own, go and take this. Go to the net asset. 12.5 times 60%. Is what you get.
7.5.
Come again.
7.5.
Tadi.
0.56 times 12.5.
5. I don't understand. No. Okay, 12.5.
12.5.
Are you sure that one's also 12.5?
Yes.
Hey, all of them 12.5. Why? What a coincidence. Are you sure? We have not picked a different figure.
Very sure.
Okay.
No.
So what do you get?
7. 7.
Come again.
7.
Then the revaluation gain we had, the one that we said to go to 10.29.
Yeah.
And 0.29. Then which one again? Remeasurement cost, remeasurements. Go to the pension scheme workings. Pension scheme workings. 2.45. Is it gain or loss? Let's check. We had 0.55, but the liability was 3. So it's a loss, right?
Loss, yeah.
Good. The remeasurement cost into bracket loss. 2.45. Loss we are subtracting. What's the closing balance? Then it will balance nicely for you.
$77.84.
Can you come again?
77.84.
77.84. Exactly. Let's talk confirm. I'll not agree. Lie. Even 14 plus 62 crowd plus 10 crowd. This console back adjustment the oh, this console is not part of your console. You should be worried about it. Like this one and last.
84.84.
Come again.
84.84.
84.
84.84. Let's go to the account. So this is a console normally by the send any question can one. Now who this is in console go with you? Yeah. Not that I'm scaring you. I'm telling you the reality. 84.84. Please help me do the adding up for me. Do the adding up for me. Now let's start. Once you are done like this, go to your start from the top. Start from the asset side. Now add all the PPE figures together for me. Close it. I have to go. My people are waiting for me.
1957.5 pp.
19.5.
57.5.
1957.
Mhm.
214. 241.
241.
Two, 4, 1. Putting all together, total asset.
2397.5.
97.5. Then current asset putting together. Current asset putting together.
$863.
Overall.
$3260.5.
0.5 is not coming over. Now total equity before NCI. Equity before OCI. Before NCI.
1641.09. 1641.
4.
1.09.
This side there are no answer point in the mess up. Add the two, what do you get?
$2120.79.
2120.79. Total non-current and then current.
Current 953.
Current.
$206.
Put everything together, let's see.
$1159.
1159. Then total equity and liabilities.
3279.79.
3279 point.
79.
So let's see. Yeah, 32 point what? 605. That is
Of
different for me.
19.29. 19.29.
I have an idea. My biggest that I want to add here, I'm not getting what you added for me, but we are good to go. For example, the PP is like this. Have you seen the revaluation gain? Do you add it to the PP?
No.
Please add it. That's the one causing the difference. So clean this one like this. What is a PP? What's the revaluation we had? Plus what?
Valuation gain
That we
was
should get.
16.29.
Now it will change this figure. So give me the correct figure, correct balance. Then the rest, wait for your 2 questions patiently.
$19,773.79.
19.
73.79.
Total on current.
2413.79.
Come again.
2453.79.
24.
53.79.
Total.
3216.
3.
2413.
This is like 2413.
Yeah, that's what I had. Done. 0.79.
Is that what everybody had?
Yeah, it's 2413.79 plus 80 to 3216.79 total. 16.79.
If you want, let me show the secret over here now. If you don't want trouble and if you want to dodge the decimals now, run all of them to one decimal place. Let's review Kakra. But for me, I'll not run it because if you pick the figures well, they should balance 9 for you.
Even still, there's a difference.
Depends of there's a figure left.
Right.
Come again.
Right.
Single 3.
Yes.
I hope you added a provision. No. I hope you added a provision.
Yes. Oh.
The defined benefit 3. I hope you added it.
Yes. We added to non-current liabilities. But the 9 is coming from the asset aspect, not even the equity and liabilities, the 3.
Come in, let me go to the land there. My next class is coming up. Oh, okay, this one's correct. This one's correct. This one's correct. The difference is 3.
Yes, single 3.
No, it's not single 3. But is it 2116 or 2176?
3276.79.
Oh, okay, single 3. Oh, it should be the one of the 3. Let me check for you. I can confirm for you. My please, the retained earnings. What do you get for retained earnings?
Retained earnings was 681.25.
6?
81.25.
681.
0.25.
Good. That's where the problem is coming from. The addition. Some of the additions were over the bar. Let me go there. So please just take your time to add them. You will get the answer, right? Can you take your time to add them for me? Re-add them. 620 plus 84 plus 30.8 minus 40 minus 0.55 plus 6 plus 7. Plus 15.
$708.25. 708.25.
Different answer again.
Once you understand the principles, okay, they'll mark and they'll mark the ticks. I mean, I don't want to balance points. So.
No, these three they are fine. The 3 is coming from you.
And let's leave it just as it is. The way you solve it, the principle is used was correct. So
3, if you take that, because I added them here, the difference was this side. So if you take the 3 from here, let me show you. If you take the 3 from here, well. If you take the 3 from this figure, it will reduce, and here it now left with 76.
6, yeah.
Then it's balance 9 for you. So do that computation for me. 3 supposed not to be there. All right, so thank you very much for coming. I'll see you when I see you on my next strong 2 questions more.
Will you share the board on the page?
Sir, please, can we get the calculations? My network was disturbing me.
Okay, so the recording it will be on our portal. I'm thinking I can also put it on YouTube there. So I don't know.